Welcome to our deep dive into the global economic outlook. We're going to be kind of like unpacking the World Bank's Global Economic Prospects Report for January 2025, which, let's be honest, is a bit of a beast of a document. But don't worry, we're here to help you navigate the dense forest of data and extract those nuggets of knowledge that really matter. Think of this as your shortcut to understanding where the global economy is headed in 2025 and beyond.
That's right. And I think this report is particularly timely. 2025 marks the end of the first quarter of the 21st century. What better time to take a step back and assess the global economic landscape, its past performance, and its future prospects?
Totally agree. It's like a giant economic report card, and we're about to see how the world has fared. So let's start with the big picture global growth projections. The report predicts a slowdown in global growth for 2025 and 2026. But it's not all doom and gloom. What's interesting here is that the slowdown is largely attributed to a deceleration in China.
That's a crucial point. It's not a uniform slowdown across the board. While China is experiencing a deceleration, emerging markets and developing economies excluding China are actually expected to see a slight pickup in growth.
So it's a bit of a mixed bag with different regions experiencing different economic realities. The report really emphasizes this unevenness in growth, doesn't it?
It does. And this brings us to our first surprising takeaway. While the outlook for many emerging markets and developing economies is relatively positive, there are some serious concerns for specific groups of countries. Low-income countries, or LICs, for short and fragile and conflict-affected situations, are facing particularly tough challenges. Their growth isn't sufficient to recover from the economic losses they've experienced since 2020.
Wow, so some countries are forging ahead while others are falling further behind. That disparity is a real cause for concern, isn't it? But before we get into the specifics of those challenges, I want to understand why this unevenness in growth matters so much. What are the broader implications?
If we connect this to the bigger picture, it speaks to the themes of global economic integration and the increasing role of emerging markets in developing economies. These countries are becoming major players on the world stage, contributing significantly to global GDP and influencing trade patterns.
Right. I remember reading that emerging markets and developing economies now account for more than half of global GDP. That's a huge shift in economic power from just a few decades ago.
Exactly. It highlights how dramatically the global economic landscape has changed. But the unevenness in growth trajectories raises important questions about whether this integration is benefiting all countries equally.
And I imagine the slowdown in China has a ripple effect on other countries, especially those that rely heavily on trade with China.
It does. The report dives into the concept of economic spillovers, which essentially means that economic events in one country can significantly impact others. Think about it this way. If China's demand for raw materials like copper decreases due to its slowdown, countries like Zambia, which rely heavily on copper exports to China, could see their economies suffer.
Okay, so China's sneeze can give other countries a cold. That makes perfect sense. But let's get back to those emerging markets and developing economies that are bucking the trend and are projected to see a pickup in growth. What's driving their relative resilience?
The report attributes their positive outlook to a combination of factors. We're seeing firming investment, robust consumption growth, easing monetary policies in many of these countries, and recovering incomes, which is boosting consumer spending.
It almost sounds like they're creating their own economic momentum separate from what's happening in advanced economies. Is there any evidence to support that idea?
There is. The report analyzes business cycle synchronization and finds that a distinct EMDE-wide business cycle is emerging. This suggests that these economies are becoming less dependent on the economic ups and downs of developed countries and are forging their own path.
That's a really interesting insight. So they're not just riding the coattails of advanced economies anymore. They're becoming drivers of global growth in their own right. Does the report provide any specific examples of this resilience in action? I'm particularly curious about what's happening in sub-Saharan Africa. That region has seen some remarkable economic progress in recent years.
They do. Sub-Saharan Africa, or SSA for short, is projected to see growth accelerate, particularly in countries that export industrial commodities. Think about countries like Nigeria and Angola, which are major oil producers, or Zambia and the Democratic Republic of Congo, which are rich in copper and cobalt.
Those are great examples. But I know that sub-Saharan Africa also faces significant challenges like high levels of poverty and inequality. Does the report address those issues?
It does. The report doesn't shy away from acknowledging the challenges. High government debt and elevated interest rates pose significant obstacles for many countries in the region. It underscores the need for continued reforms and prudent fiscal management.
So even within a region that's projected to see growth, There are variations in performance and different levels of vulnerability. It's not a monolithic picture.
Exactly. And this brings us to another crucial point that might surprise you. Climate change is emerging as a major downside risk for all emerging markets and developing economies. But the impact is not uniform.
Wait, how does climate change factor into economic projections?
Climate-related disasters such as droughts, floods, and storms can disrupt economic activity, both immediately and over the long term. They can damage infrastructure, disrupt supply chains, and increase uncertainty, which can make it harder for businesses to invest and grow. The report highlights this as a growing concern for all economies, but especially for emerging markets and developing economies.
That makes sense. But you mentioned that the impact isn't uniform. What did you mean by that?
Smaller economies, particularly those concentrated in regions like East Asia and the Pacific, and Latin America and the Caribbean are particularly vulnerable. They often lack the resources and infrastructure to cope with climate shocks. Think about island nations in the Pacific that are facing rising sea levels, or countries in Central America that are prone to hurricanes.
Okay, so we've got this global slowdown, largely driven by China. But emerging markets and developing economies excluding China are showing resilience. However, this resilience is not evenly distributed, and some countries are facing serious challenges. What about those low-income countries we talked about earlier? What does the report say about their prospects?
The report paints a concerning picture for low-income countries. They're facing a confluence of internal and external challenges, including weak growth, high debt levels, conflict, and climate vulnerability. In fact, the report highlights a truly shocking statistic. Per capita income in these countries has essentially stagnated for the past 15 years.
15 years. That's astounding. I mean, think about all the technological advancements and economic progress that's happened in the past 15 years. And yet, for millions of people living in low-income countries, their lives haven't materially improved. That's heartbreaking, isn't it?
It is. It's a stark reminder that global economic growth hasn't benefited everyone equally. And it raises serious concerns about the prospects for poverty reduction and achieving the Sustainable Development Goals.
So we've gone from this relatively optimistic picture of emerging markets and developing economies, at least those excluding China, to a much bleaker reality for low-income countries. What are the long-term consequences of this stagnation? Why should our listeners care about what's happening in these countries, especially if they live in more developed economies?
It's not just a moral imperative to care about poverty and inequality. It's also in everyone's best interest to address these issues. Remember those spillovers we talked about? Well, poverty and instability can create their own set of spillovers, including migration flows, social unrest, and even security threats that can extend beyond national borders.
So it's not just about doing the right thing. It's about recognizing that our fates are intertwined. The challenges facing low-income countries can eventually impact everyone, regardless of where they live.
Exactly. Addressing these challenges requires a global effort. But before we get into potential solutions, I want to delve a bit deeper into the specific obstacles facing these countries. The report analyzes graduation prospects, which refers to the likelihood of low-income countries reaching middle-income status. And the findings are quite sobering. Only a small number of LICs are on track to graduate by 2050 at their current growth rates.
That's a stark contrast to the rapid graduation rates we witnessed in the past, isn't it? It really highlights how much harder it's become for countries to break free from the shackles of poverty. Does the report offer any insight into why this is happening?
It does. And it uses some specific case studies to illustrate this point. The report examines countries like Ethiopia and Rwanda, which experienced remarkable growth accelerations in previous years, fueled by factors like political stability, economic reforms, and investments in infrastructure and human capital. But now they're facing a new set of headwinds that are hindering their progress.
So even countries that were once held up as success stories are now struggling to maintain their upward trajectory. What factors are contributing to this global increase in economic uncertainty?
The report points to several major global risks. Policy uncertainty is a major factor, particularly the threat of adverse policy shifts in major economies. One example is the rise of trade protectionism.
You mean those policies that restrict imports and exports? We've definitely seen a surge in protectionist rhetoric and actions in recent years.
Exactly, and the report highlights this as a major concern, especially for emerging markets and developing economies that rely heavily on trade.
Can you give me a specific example of how this might play out?
Imagine a scenario where a major economy like the United States significantly increases tariffs on goods imported from a developing country. This could have a devastating impact on that country's export industries, leading to job losses, factory closures, and a decline in economic output.
That's a really clear example of how those seemingly abstract policies can have very real consequences for people's lives. It underscores the interconnectedness of the global economy and how decisions made in one part of the world can ripple out and affect everyone.
Precisely. And it's not just about tariffs. Other forms of trade protectionism, such as quotas, subsidies, and regulatory barriers, can also have a significant impact on global trade flows and economic growth.
So it's a complex web of interconnected issues. We've got trade protectionism adding to global economic uncertainty. Are there other risks that the report highlights?
Absolutely. Geopolitical tensions and conflicts are another major concern. Think about regions like the Middle East, where ongoing conflicts can disrupt global energy markets,
Yeah.
leading to price volatility and economic uncertainty.
So it's not just about the direct impact of conflict in a particular region, but also about the knock-on effects on the global economy.
Exactly. Conflict breeds uncertainty and instability, which can make businesses hesitant to invest and consumers cautious about spending.
And I imagine that climate change, which we discussed earlier, also contributes to this sense of uncertainty and risk.
You're absolutely right. Climate change is a threat multiplier. It exacerbates existing risks and creates new ones. For example, climate change can intensify resource scarcity, leading to conflicts over water and land, which can further destabilize regions that are already vulnerable.
It sounds like we're dealing with a perfect storm of challenges: trade protectionism, geopolitical tensions, and the ever-present threat of climate change. It's a lot to take in.
It is. But the report doesn't just lay out the problems, it also offers some potential solutions.
Okay, so what's the antidote to this economic malaise? What concrete steps can be taken to navigate this turbulent landscape?
The report calls for a range of policy reforms aimed at boosting investment and productivity, navigating this challenging external environment, and enhancing overall economic stability and resilience. It's a call to action, a roadmap for creating a more sustainable and inclusive global economy.
That sounds promising. But before we dive into the specifics of those recommendations, let's take a quick break. When we come back, we'll explore the report's policy prescriptions in more detail and see what concrete steps can be taken to address these global economic challenges. Stay with us.
Welcome back to our deep dive into the World Bank's Global Economic Prospects Report. Before the break, we were discussing some of the major global risks that are clouding the economic outlook, things like trade protectionism and geopolitical tensions. Let's now shift our focus to some specific economic indicators, starting with inflation.
Okay, let's unpack inflation. It's been a hot topic for a while now, causing anxieties for consumers and headaches for policymakers. What's the report's take on where inflation is headed?
The report offers a bit of good news on the inflation front. Global inflation is expected to continue its downward trend in 2025.
So is it safe to say that the worst is behind us? Can we breathe a collective sigh of relief?
Well, not so fast. While the report projects that headline inflation will continue to moderate, it also cautions that core inflation, which excludes volatile food and energy prices, remains stubbornly high in 2024.
I see. So while those eye-popping grocery bills and gas prices might start to ease up the underlying price pressures in the economy, could be stickier? What's the significance of that? Why should we care about core inflation?
Core inflation gives us a better sense of the underlying trend in prices, stripping away those volatile components that can swing wildly from month to month. If core inflation remains elevated, it suggests that the factors driving price increases are more deeply entrenched in the economy and could be harder to tame.
So it's a bit like peeling back the layers of an onion. We need to look beyond the surface to understand what's really driving inflation and what are the potential consequences if core inflation remains high.
Persistently high core inflation can become self-fulfilling. Businesses might continue to raise prices in anticipation of further cost increases, and workers might demand higher wages to keep up with the rising cost of living. This can create a wage price spiral that's difficult to break.
It sounds like a vicious cycle. Does the report offer any insights into how we can break out of this inflationary spiral?
The report emphasizes the importance of prudent monetary policy. Central banks around the world have been raising interest rates to try to cool down demand and bring inflation under control. The report suggests that these efforts are starting to have an impact.
Right. We've seen several central banks, including the U.S. Federal Reserve, raise interest rates quite aggressively in recent months. But doesn't raising interest rates also risk slowing down economic growth?
It does. It's a delicate balancing act for policymakers. They need to find that sweet spot where they can curb inflation without triggering a recession. The report acknowledges that there are risks of both sides.
So it's a high-stakes game of economic chess. And what about the impact on emerging markets and developing economies? We talked earlier about how those spillovers from advanced economies can affect them. Does the report address that?
It does. In fact, the report highlights a divergence in financial conditions between advanced economies and emerging markets and developing economies.
Mm,
While financial conditions have generally eased in advanced economies since mid-2024, they actually tightened in emerging markets towards the end of the year.
that's interesting. So we're seeing different financial realities playing out in different parts of the world. Why is that?
There are several factors at play. One is the strength of the U.S. dollar. As the Federal Reserve raises interest rates, it tends to make U.S. dollar-denominated assets more attractive to investors, which can drive up the value of the dollar.
Right. A strong dollar makes U.S. goods more expensive for buyers in other countries, and it also makes it more expensive for emerging markets to service their dollar-denominated debts.
Exactly. It's a double whammy for many emerging markets and developing economies. And this divergence in financial conditions underscores the challenges they face in navigating this turbulent global economic environment.
It's like they're trying to sail a small boat in choppy waters. What other challenges are they facing on the financial front? Does the report delve into that?
It does. One issue the report highlights is the risk of sudden shifts in capital flows.
Can you explain what you mean by that?
Imagine a scenario where investors spooked by global uncertainty or concerns about a particular emerging market's economic prospects suddenly pull their money out of that country. This can trigger a rapid depreciation of the country's currency, making it more expensive to import goods and potentially leading to inflation.
So it's like a stampede for the exits, and it can leave emerging markets scrambling to stabilize their economies.
Exactly. It highlights the vulnerabilities that many emerging markets face, especially those with high levels of external debt or weak financial institutions.
So these sudden capital outflows can amplify those vulnerabilities. Does the report offer any insights into how countries can protect themselves from these sudden shifts in investor sentiment?
It does. And it circles back to those policy recommendations we discussed earlier. Strengthening institutions, improving governance, and promoting financial sector development are all crucial steps.
Can you elaborate on why those things are so important?
Think about it this way. If a country has a well-regulated banking system, transparent financial markets, and a stable political environment, it's less likely to spook investors.
It's about building confidence and reducing risk, right?
Exactly. It's about sending a signal to investors that their investments are safe and that the country is committed to sound economic management.
So it's about creating a more predictable and stable environment, which is essential for attracting long-term investment and fostering sustainable growth.
That's precisely it.
Okay, so we've got inflation easing, but core inflation remaining a concern. And we've got these divergent financial conditions between advanced economies and emerging markets. What about the global financial system as a whole? Is the report concerned about any systemic risks?
The report does express concerns about financial fragility in some emerging markets and developing economies.
What are the signs of financial fragility?
Think about things like high levels of corporate debt, weak banking systems, or underdeveloped financial markets. These vulnerabilities can make countries more susceptible to shocks and can amplify the negative effects of those sudden capital outflows we discussed earlier.
So it's like they're building a house on shaky foundations. Even a minor tremor could bring the whole structure down.
That's a great analogy, and this is why the report emphasizes the importance of financial sector reforms.
What kind of reforms are we talking about?
Things like strengthening bank supervision and regulation, improving corporate governance, and developing local currency bond markets. These reforms can help to reduce risks and make financial systems more resilient.
Okay, so it's about making those financial systems more robust so they can withstand shocks and support sustainable economic growth.
Exactly. And it's not just about mitigating risks. It's also about creating opportunities.
What do you mean by that? What kind of opportunities are we talking about?
Think about the potential of financial technology or fintech to expand access to financial services for underserved populations. Think about the role of green finance in mobilizing investments for climate action. There's a lot of potential for innovation in the financial sector to drive inclusive and sustainable development.
That's a really important point. It's not just about fixing what's broken, it's also about harnessing the power of finance to create a better future. This conversation has really highlighted the interconnectedness of the global economy and how decisions made in one country can have far-reaching consequences. It's a complex and ever-changing landscape. But we've covered a lot of ground in this deep dive, from global growth projections to inflation dynamics and financial developments. And throughout it all, we've seen how emerging markets and developing economies are both shaping and being shaped by these global forces. What I'm really curious about now is how these countries are adapting to this changing world.
That's a great segue into the next part of our deep dive. The report delves into the remarkable journey that emerging markets and developing economies have undertaken over the past quarter century.
This is where it gets really fascinating. I'm eager to hear about their successes, their challenges, and what the future holds for these dynamic economies. Let's dive in. Welcome back to our deep dive into the World Bank's Global Economic Prospects Report. We've covered a lot of ground exploring global trends, risks, and those policy levers that countries can pull. But now I'm excited to shift gears and focus on the remarkable journey of emerging markets and developing economies over the past 25 years.
It's a fascinating story. The report refers to it as a quarter-century report card, and it's full of insights into how these economies have integrated into the global system.
Okay, so let's see those grades. What are the highlights of this report card? What stands out to you as the most significant achievements of these economies?
Well, their share of global GDP has more than doubled since the year 2000. It's huge. They've become major players in international trade, attracting significant investment flows and influencing commodity markets worldwide. In fact, the report points out that since 2010, each of the three largest emerging markets, China, India, and Brazil, has consistently ranked among the world's top 10 economies.
Wow, that's truly a testament to how much economic power has shifted in the last 25 years. It seems like we can't talk about the global economy without acknowledging the enormous influence of these emerging giants.
Absolutely. The report makes it clear that we can no longer think of these economies as simply emerging. They've arrived, and they're shaping the global economic order in profound ways.
But I'm guessing it hasn't all been smooth sailing. Have there been any setbacks or challenges along the way?
Of course, no economic journey is without its bugs. The report acknowledges that the pace of integration has slowed somewhat in recent years, and these economies are facing a new set of headwinds.
What kind of headwinds are we talking about?
Well, one significant factor is the slowdown in cross-border integration. Global trade growth has lost momentum, and foreign direct investment flows have decreased. We're also seeing greater fragmentation in global value chains, meaning that the intricate networks that companies rely on to produce and distribute goods are becoming more localized and less interconnected.
This sounds familiar. Didn't we discuss this earlier? The whole trend toward protectionism and those rising trade barriers? It seems like those policies are contributing to this slowdown in integration.
You're absolutely right. Those protectionist policies like tariffs and quotas create uncertainty and disrupt those intricate global trade networks, making it harder for businesses to operate efficiently. And on top of that, many emerging markets and developing economies also face internal challenges, like the need for structural reforms to boost productivity and competitiveness.
So it's like they've reached a crossroads. They've achieved remarkable progress, but to maintain their momentum, they need to overcome these obstacles, both internal and external. Does the report offer any guidance on how they can navigate this new terrain?
It does. The report emphasizes the need to reinvigorate structural and institutional reforms. It's about creating the right conditions for businesses to flourish, to attract investment, boost productivity, and unlock that long-term growth potential.
Can you give me some concrete examples of what these reforms might entail?
Um, Think about streamlining regulations to make it easier to start and run a business. Strengthening the rule of law and tackling corruption can also foster a more attractive investment climate. And of course, investing in infrastructure, education, and skills development is crucial for building a more productive and competitive workforce. These are all essential ingredients for creating a more dynamic and resilient economy.
It sounds like it's about fostering a culture of innovation, efficiency, and transparency.
Exactly. It's about creating an environment where businesses can thrive and people can reach their full potential.
Okay, so we've got this fascinating narrative of emerging markets and developing economies' integration into the global economy, the triumphs, the challenges, and the road ahead. What are the key takeaways you want our listener to walk away with from this deep dive?
I think there are three big takeaways. First, emerging markets and developing economies have come a long way, but their journey is far from over. They've demonstrated incredible resilience and adaptability, but they need to stay agile to navigate this new landscape of greater uncertainty and volatility.
So agility is key. Don't get complacent. Keep adapting, keep innovating. Got it. What's the second takeaway?
The second takeaway is that proactive policies are essential. These economies can't simply react to global events. They need to be proactive in driving their own growth and development. That means implementing those structural reforms, investing in human capital, and fostering innovation.
Be bold, be strategic, take charge. Okay, I love it. And the final takeaway.
And finally, we need to shift our mindset. Those old paradigms of developed versus developing are outdated. These economies are major forces in the global economy, and their success is intertwined with everyone else's. Their growth benefits the entire world, and their challenges, if left unaddressed, can have ripple effects that impact us all.
That's a powerful message. We're all in this together, and recognizing our interconnectedness is essential for creating a more stable and prosperous global
I
economy.
couldn't agree more.
Well, dear listener, we've reached the end of our deep dive into the World Bank's Global Economic Prospects Report for January 2025. It's been quite a journey through the intricacies of the global economy, from those big picture trends to specific policy recommendations, and of course, that amazing transformation of emerging markets and developing economies over the past 25 years.
We hope this deep dive has given you a better understanding of where the global economy stands today and where it might be headed in the years to come.
And remember, this is just a taste of what the full report has to offer. We encourage you to explore the source material and continue learning about this complex and ever-evolving economic landscape.
Until next time, stay curious and keep exploring.
Thanks for joining us.